It's my privilege to introduce Danny Finkelstein, who wears many hats both sides of the Atlantic. Perhaps one lesser known hat is that he's a senior fellow of the Manhattan Institute. So we are absolutely delighted to have him here today and leading this important discussion with Mr. Redwood. Thank you, Danny.
Thank you very much indeed. Well, it's very kind of you to have invited me and given me this opportunity. When you've worked in a career in politics and journalism, one of the great advantages is you get to work with some of the biggest and most colourful and interesting figures of the age. And I was very lucky to work with John Redwood, and I'm lucky to be sitting with him now because it gives us the opportunity to discuss with one of the sort of intellectual pacemakers in British politics, some of the most tricky and difficult political questions faced particularly by free market conservatives. What has distinguished John Redwood's career is that he has a consistent intellectual thread, but very much a practical bent, and has been involved in some of the most important of the sort of practical measures that the Thatcher government took to reduce the size of the state and to introduce competition into services and to consider the issue of how free markets actually operate. So we'll have the chance to have theoretical discussions, but I'm sure we'll also get a chance to have practical insights. So thank you very much, John. I did want to start, if that was all right with you, with a sort of general view about the role of the state, because there, among people on the right, there's quite a variety of views about to what extent the state has a role at all. So to what extent would you associate yourself with a sort of almost an Institute for Economic Affairs more minimal state view?
I think the state has a crucial role. It is the policeman of a free market and a free democracy. It is the voice of people in the democracy. It is the way that people expect redress for the problems that the market may create, as well as the problems that governments undoubtedly create. You need a strong state, but you need a fair state, and you need a democratic state. The state has to defend us. There is a need for the state to secure the interests of the people living in the United States of America or the United Kingdom. The state has to create a framework of law within which a free and fair commerce is then possible. One big role for the state to ensure that you have a free enterprise system is you need a very tough competition policy. I'm a competition hawk. I think the United States has been better at policing competition policy and breaking up some of its greatest and most successful companies than the Europeans have been. I think the Europeans have arrived rather more reluctantly to the competition issue. And the state should above all take care of those that the market cannot take care of. And most of us conservatives in the United Kingdom, I think many conservatives in the United States of America, believe there is a crucial role for the state to say this individual is ill, sick, incapacitated, is unable to earn a decent living, so we need to intervene, we need to take money off the successful and give it to the unsuccessful.
I know that last night the group heard from Nigel Lawson, and I was very struck in his memoirs when he said that the phrase we're underspending on the National Health Service is a meaningless one, because what does underspending mean? But of course, when I read that, I thought it's also true, and a big challenge to us, that the idea the state's too big doesn't have a meaning either. How can one tell whether the state's too big?
Well, I think when the state preempts too much of the money in the country, when it takes up too much of people's incomes, then it is too big. And you can see that when the marginal tax rates are so high that people want to go somewhere else, or they don't want to work so hard. When the state is borrowing too much, that the borrowing becomes a threat to financial stability. When the state intervenes and regulates too much so that many people say it's not worth my while, or I cannot run a business in these conditions, then we can fairly conclude that the state is too big. I think the coalition government in the United Kingdom is correct to conclude that the state at the moment in the United Kingdom is preempting too many of the resources. It is borrowing too much, and rightly the United Kingdom government has said it wishes to get the borrowing down. The political argument is, how do you do that? The pace at which you do it. Can you do more of it the good way, by growing faster so that more revenue comes in, or do you have to do more of it by the tougher way, which is reducing things that the state does or taking the state out of certain areas. That is where our political debate is. A lot of the debate in the United States of America over the presidential election campaign will be about just that issue. The Republicans, whoever they choose, are likely to choose someone who believes that the state should spend less and borrow less than the Democratic incumbent, and that will be then judged by the people.
I mean, I'm always happy with this practical idea. You know, you look at the state and say it's too, you know, how do you make a bust of, Jacob Epstein was asked, how do you make a bust of Ernest Bevin? And he said, you chip away all the bits that don't look like Bevin. And my practice to the bit of the state is a little bit the same. But do you have in mind some sort of percentage of GDP beyond which, because some people on the right do, they start to talk about 40% or whatever of the state. Do you have that in mind yourself?
Yes, I do. I mean, it's hazardous for a politician to say that because their opponents then always identify a whole series of items that they would choose to cut out to make it as miserable as possible to get there. But I think we are in a slightly different world at the moment because both main parties in the United Kingdom agree that the proportion of resource taken by the state has to fall. I would answer your question with a little bit of caution as a politician by saying that if you look at the past history of the United Kingdom since the Second World War, no party in office, including some very socialist parties in office, has ever been able to raise more than 38% of national income in total taxes. And so I think your total spending should be related over the long term to the 38%, which democratic politicians of all persuasions seems to think is about the limit of the money that you can raise. And that allows me a little leeway. If you're near or in a recession, you could spend a bit more because you would be borrowing, because you would allow the borrowing to creep up. But you should remember to spend a bit less when the times are good, so that you reduce the borrowing then instead of allowing it to constantly escalate.
Gosh, that's a fascinating figure. We could concentrate on this to the exclusion of all else, but I do want to get into some of the more practical things. And here, you know, there's no question that the free market model has come under a lot of pressure, from intellectual pressure, from people saying now the banks have collapsed or had to be saved from collapse only by the state. It illustrated that free market capitalism doesn't work freely, and you need big government. We had to nationalise the banks just like Ken Livingstone wanted. So let's start with an initial response to that. Let's start with an initial response to that suggestion.
Well, I was one of the few United Kingdom politicians that opposed the nationalisation of RBS and the very large state injection into Lloyd's HBOS. I think it was a huge error. I think it has made the task of defenders of free enterprise more difficult. Our critics can now say, there you are, the very core of your system. Commercial banking doesn't work. They say that it's run by greedy and incompetent people. That's not true of all of them by any means, but you can find examples of that, I'm afraid to say. And that led the banks into deep trouble, and in order to rescue the economy and the society, the state had to go to their rescue and put in these huge sums of money. My answer to that is that that is not free enterprise. A free enterprise system is based upon competition. And perhaps one of the most important things about the free enterprise system, when it's functioning properly, is it has a relatively straightforward way of killing off an enterprise that isn't working and transferring the assets to new managers who can run them better and with greater financial skill. Whereas the state sector doesn't have a way of killing things off easily, and so bad things tend to linger on in the state sector and be very heavily subsidized. So my worry when they transferred two of our worst banks into partial or complete public ownership was just that they are going to linger there for longer than is healthy, and they will remain subsidized, and they will remain a thorn in the side of people who believe in free enterprise.
But Alistair Darling, if he were here, would respond, they were going to turn the cash machines off at Royal Bank of Scotland within 2 days. I had to do something.
Yeah.
So what would if you'd have been in his shoes, what would you have done?
Well, if I'd been in his shoes, I wouldn't have been on holiday a year earlier and would have fixed the problem then. And when they saw the run on Northern Rock, I'm not quite sure what more warning you needed that this could spread to a big bank. But if you had got to that awful position he'd got to by negligence and incompetence,
Can I just interrupt you for 1 second? What would you have done the year earlier?
Well, you would have demanded better cash and capital ratios from the weak banks before the balloon went up. And you would also have asked the central bank to keep the markets more liquid than they did, because it was a dreadful failure of central banking both ways, in my view. The central bank and the banking regulators made a huge series of errors in the run-up to 2007, because they really bought into this strange idea that the world was different and that banks could be massively more geared than they'd ever been before and get away with it. And they made the cash available for them to do that. And then, 2007, 2008, the central banks thought they would teach these banks a lesson, which meant bankrupting them. And I didn't see the point of doing that. They, having made the mistake with the commercial banks of overextending their balance sheets, they should have worked with them to reduce them in a timely and sensible way, whilst making the liquidity available so they didn't go bankrupt. What should he have done if he'd got to that crisis? Well, I made a recommendation at the time. What he should have done was what I called controlled administration. And he should, of course, put in as much money as it took to protect the deposit base of the retail banking arms of those banks, and as much liquidity as it took to prevent the bank being in actual default. But he should not have put in taxpayers' money as risk capital, and he should have made the bank break itself up and sell off the assets that were saleable, and let the shareholders and the bondholders of that bank take the hit, because there would have been a shortfall.
And some of that you could do now, couldn't you?
Well, and the tragedy is that being more or less the lone advocate of this policy when it mattered in 2007, 2008, and being told by both Dr. Cable and Mr. Brown that we had to nationalise the banks, I now find, thanks to John Vickers and others, that my recommendation is the policy for a future crisis. So it wasn't all in vain. The official line now is that were we ever to stand on such a threshold again, each bank now has to have drawn up a living will. And what does a living will do? It says that if I get into trouble as a bank in the future, I will be broken up. And they ring-fence the sensitive bits that nobody wants to see damaged, and nobody's foolish enough to want to turn off the cash machines and bring the economy to a grinding halt. But I really don't see why taxpayers should have to pick up the bill for the foolish risks that the commercial banks excessively took in the run-up to the credit bubble bursting, and why we should pay the bill rather than the bondholders as well as the shareholders.
There was a little tweak there at the actions of the Bank of England, and the Times has been running a series on Mervyn King and the decisions that he made. You'd be with his critics.
I have been very critical of the bank, yes, and I've been critical at the right times, looking back, fortunately, because I obviously need to check that my record made sense as well. But in 05-06, I was saying that things were too easy, interest rates were too low, there was too much money around. In 07-08, I was saying interest rates are too high, you're not making enough liquidity available, you will bring the system down. It wasn't difficult, that call. It was so obvious. The markets were saying it, but for some reason, the central bank was deaf to these obvious points.
And when we're appointing a new governor of the central bank, are you sympathetic to those people who say it should be someone with more experience of financial services than Mervyn King had? I mean, he's an academic economist.
I think that might be a good thing on their CV, yes. We have decided to concentrate an enormous amount of power into the hands of the holder of the office of Governor of the Bank of England. The Governor of the Bank of England in future will not merely do all the functions of a Federal Reserve Board type central bank with a duty to control inflation and a duty to make sure the economy doesn't fall off a cliff in terms of output, but he will also be at the centre and at the apex of bank regulation. And these are two colossal jobs, and they've been united in the one man with two separate experts helping him with two different committees. So when you have so much power, yes, you're going to need someone of exceptional sensitivity and skill, but you're also going to need some very good lieutenants who are able to do that. Because you see, I think when we're explaining the crisis to people, the spin doctors on both sides of the Atlantic operating for the politicians and also operating for the banking regulators and the central banks, the three hang together, have done a very good job at saying the only thing that was wrong in 2005 to 2008 was a set of very bad and greedy commercial bankers, and that if only we'd had better people running the banks, all would have been well. I'm afraid that is completely untrue. There were a lot of perfectly decent, respectable, sensible people running banks, but some of those got caught up in it as well. This was a catastrophic failure, not just of some commercial banks, but also of the central banks and also of the banking regulators. Now, one of the curious lies that often travels much more successfully than the truth, certainly in this country, is that the problem of the noughties, the last decade, was that we had too little banking regulation, that we somehow deregulated the banks, and this was why we had these problems, and all we've got to do now for the future is a massive increase in regulation and it will all be fine. Now, if you look back over the noughties, you will see that the British government then changed banking regulation, and the text of their change was to make it more centralized and more controlled. They certainly increased the amount and volume of regulation massively. It wasn't that we lacked regulation, it was that no one running the regulatory system on either side of the Atlantic was prepared to say, if I look at all these banks' balance sheets, they are out of control, they are crazy, we have to manage them back to normality. They just let them carry on because they all made the single same error, which was they believed that these new global banks could manage risk more successfully, and they were all fine.
I want to come back to an issue that's very hot, political topic, which is bankers' remuneration and remuneration in general, but by a slightly different route than this. I want to talk to you about Charles Moore's very interesting assertion, but it's been made by others too, that capitalism now gives to the top people. It may find a way of helping the people at the bottom, but it's no longer proving an instrument for helping the broad mass of people. I think I'm overstating his case, because I'm sure he wouldn't suggest that we don't have capitalism, but I think he does point to a serious issue. And Bill Clinton put it another way. He said we've created jobs, but they're not what he called, more Clinton type phrase, American dream jobs, whatever that means. And Ed Miliband talks about the squeeze middle. They're all driving at the same issue, which is does the way that free market capitalism now work in a global system, squeezing the incomes of people who are not welfare recipients and not the top people, but the working people?
I think it's a very real problem in both the United Kingdom and the United States of America. We've had falling real incomes for some time, particularly intense in the United Kingdom through the recession, and even coming out of the recession because of the relatively high rate of inflation and the squeeze on wages. The problem is not as bad globally. That's no comfort to the squeezed middle in America or Britain. But globally, the case for capitalism gets stronger by the day. And capitalism is showing, as many of us always thought, its huge power to get hundreds of millions of people out of poverty. And we are living through this dramatic period when China and India and quite a lot of other Asian and some Latin American countries are at last coming to the world party, and their real incomes are growing by 5, 10, 15% per annum. It's heady, it's exciting, and it's creating these huge markets. And why shouldn't those people have the opportunity through their hard work and application to join that world party and to get a bit closer to our enormously high living standards? This poses a problem for Western politicians. And I think Western politicians are reluctant to say to their electorates that whilst there are opportunities from the East joining the World Party, there's a far bigger competitive challenge now. And that competitive challenge emerging from Asia and Latin America is going to squeeze the wages of people in Europe and America doing the things that the new countries are capable of doing. So how do we respond to that? Well, we have to create a free enterprise system and an educational system which can get more of our people into the value added above the areas that the emerging markets are going to be able to take away from us by their superior efforts and their application of their skill. So it's a difficult message that politicians have to put across, but the answer is that we have to get smarter and better and more innovative. And so it is up to the politicians, I think, not only to explain that truth, but also to take the measures in America and Britain that you need to take to make it more possible for people to do that.
One of the consequences of a sort of long-term, slightly lower growth, more squeeze on middle incomes competition is a rising battle about fairness, about distribution, which one has been able to avoid by constantly growing very quickly, and that's come back. Now, you and I once had a conversation about our top wages, and you were talking about, you had your competition hat on, you were a competition hawk about it, and we'll come to that in a second. But the problem with it is that when one develops that argument, one finds oneself in the end almost sort of criticising the businesses that you want to come to this country, and they say, well, if you're going to be so critical about my wages, I'll go and put my business somewhere else. So how do you strike the right balance? On the one hand, responding to this fairness debate. Secondly, doing something about competition for staff and not having what seems to me like a price bubble where people are being paid very large salaries without necessarily being worth it. But thirdly, not pushing those businesses out of the country where they think it's too hard to do business with British people because they make such a fuss about our wages. How do you strike the right balance?
Well, I think the balance has to be struck around the general perception of fairness, and I think you're quite right in what you said, but I think if you probe a little further, certainly in the United Kingdom, and I think probably even more so in the United States of America, people who are not on very high incomes are remarkably tolerant about people who earn fabulous sums of money if it is their business, their hard work, their idea. They don't really mind if a very successful entrepreneur makes a lot of money because they rather like the story. That is the American dream par excellence. In America, you start with nothing, you start in your garage, and one day you're owning a multi-billion corporation, and people say good luck to him. They're not terribly jealous of how much he's made. Whereas at the other end of the spectrum, if you are a board director invited in to join a bank which then needs a very large sum of public money to carry on, I think all of us, me included, say, why is this man being paid so much if effectively his wages rests upon a state subsidy to keep his bank going? So my advice to the politicians is to understand that differential and to deal with the extremes. And so for the extreme cases where people are earning very high sums of money, attracting a public subsidy, that is in the control of the government, and they shouldn't let it happen, and they must take action to stop it. But where people are making lots of money because they are creating jobs and adding to the excitement of the marketplace, I think we should be very tolerant of them, and we should have a regime on tax and regulation which attracts more and more of them. This is a very footloose world, and one of the ways that a medium-sized country or even a large country can do well against this avalanche of competition from Asia and Latin America is to be the preferred place where those very talented people want to start their businesses.
I want to just ask one other thing, which is that in addition to these sort of broader long-term problems, we have an immediate acute problem caused by, to some extent, what I call Baldrick's cunning plan, the euro.
It's a bit unkind on Baldrick, isn't it?
Yeah, I think probably is. We're in this now. What are we going to do? I mean, not we, Britain, but Europe.
Well, I thought a lot about this because the euro has been an important part of my life for quite a lot of years now. It's one of the leading advocates of the United Kingdom not joining it, and occasional advisor to those who have joined it. My view is that they cannot save it for all the countries currently in it. And so I think it would be best if they adopted a policy of saying to any country that can no longer finance itself in the normal way within the euro, that one of the serious options at that point is to leave the euro, and I would certainly require Greece to leave the euro. How would they do it? Well, they can do it quite easily because Greece needs to borrow money from the other euro members, so you would simply say there is no money to lend to you unless you leave the euro. And I think if they got rid of the 2 or 3 weakest elements in the euro that cannot finance themselves, they have more of a chance. The danger is that they're spending too much of their firepower and available money on defending countries that are so far away from living happily in the euro that they're unlikely to succeed, and they're therefore undermining the amount of firepower they have to keep the others in, who may need support and assistance from time to time, because they'll have spent so much on the outliers that are difficult to keep in. So I would say to them, negotiate Greece out, maybe the same for Portugal and Ireland, because they're so far off the pace, and then try and defend the next difficult cases. I think Italy is defensible. I think Spain is going to be difficult, and it will require a lot of cooperative work to ensure the Spanish banking system is nursed through these problems. But it would be worth doing, and if they can assure themselves that they're not going to spend all their money on countries like Greece and Portugal where the problems are so intense. But in the end, as you said, Danny, and I've said, you only have a successful single currency if you have a single government and a single political mechanism to back it up. If the Germans want a successful single currency, I'm afraid they do have to pay more of the bills. But I don't think Frau Merkel is yet very willing to explain that as openly as she might. I can understand her political difficulties, but somebody's got to sell to the German people that they need to make bigger transfers to the poorer areas. Why does the dollar and the sterling single currency areas work? Well, they work because there is a single sovereign state behind them, there is a single language, there is a common labour market, and there are massive financial transfers between the richer and the poorer parts of the area. There are tiny transfers within the Eurozone, there is no common language, there is no common labour market. It makes it all extremely difficult.
Thank you very much indeed.